Smart Silver Stacker here. Hope you're doing well. I've got a lot to talk to you about today. We've got a pretty sharp pullback in the price of gold, but that's, I don't think, really the shocking thing here. The shocking thing is some of the news that we got today. And I gotta say, it is looking less and less like we can trust any of the economic data which we are receiving because it's all being massaged. I mean, that is how it appears, at least based on the revisions that were put in today. It's all, if not outright fake, it's all being massaged to make things look a lot better than they are. Let's get right into it with this headline from Bloomberg today. U.S. consumer spending rose at the weakest in a year last quarter. Now, that's not that surprising. I mean, we know the economy is beginning to fall apart. There's a tremendous amount of leverage. The consumer dollars in credit card debt now in the US. The rates on the cards are at a record pace. But the really shocking thing about this is the nature of vision. We've got a revision down from 1.7%. That was the previous estimate for consumer spending growth, but it was revised down to 0.8%. So they got that wrong by almost half. And, when you look at this in light, if it was an isolated thing, it would be one thing. I'd say, okay, well, they got the data wrong. No big deal. But just look at that, the nature of that, the magnitude of that revision. And you look at it also in light of like the jobs numbers that we've been getting, right? I think it was, every single month for the past 12 months, the jobs numbers have had to be revised down. Clearly, these numbers are being massaged. They are being manipulated upward. They are painting a pretty picture for us because the likelihood that you would get those estimates wrong that many times in a row, 12 months in a row, it's like the same odds as getting hit by lightning twice in the same day on separate occasions. It's really just incredible how this data is being presented to us. And, gold didn't like the news today that the consumer was much weaker. Now, very conveniently for the folks who are putting this data together, they also reported that the decline in consumer spending was offset because of stronger business fixed investment. So very convenient that that number was revised upward. In fact, it was revised upward just enough to cancel out the decline in consumer spending exactly. So the GDP, same rate, but a much, much weaker consumer. Now, again, what are they hiding here? Why are they manipulating this data? Well, the reason is because this economy is headed towards a massive downturn. We are in a huge recession. The failed policies of trying to drive growth via government deficit spending, it's not working. Bidenomics is a huge failure, but they're not going to let us know that, right? They're going to keep manipulating this data. And it's no secret that, data like the CPI have been manipulated for some time to downwardly report on inflation. I think anybody who goes to the grocery store knows that the official inflation numbers are much lower than they are in reality, than the actual cost increases to the consumer. And the fact that consumer spending is weak, consumers are tapped out. The savings rate is at a record low. The pace of credit card delinquency increases is at a record. Now, they are coming off of a record low. That's true, because when everybody got their stimulus checks, but now those numbers are shooting back up. The economy is on the rocks. That's what's going on here. The fact that gold declined, gold now down under $1,900. Look at that. That's a pretty big pullback. Silver's just under 20. So this has been a pretty big pullback in both precious metals. But, I've been warning for a while now in several videos over the past couple months that we need to be on the lookout for a big sell-off in the precious metals, because I think we're headed towards probably a pan sell-off, a liquidity crisis in these markets. Rates are moving up. Inflation is continuing to move up. Look at this. This is, we've looked at this chart before, but that's the interest payments on the US national debt, which, by the way, I mean, look at the US national debt. It's incredible. We're over 33.1 trillion now. Think about that. We just hit 33 trillion like what, a week ago, and it seems like it was just a couple months ago that we hit 32. So I mean 34 is right around the corner, then 35, then 36. The spending is absolutely out of control. The tax revenue is declining because the economy is falling apart, and yet they're continuing to increase spending. So it's a recipe for enormous deficits. And the Fed plays dumb. Jerome Powell talks about, energy prices driving higher inflation. We're seeing inflation begin to tick back up now. And yeah, I mean, higher energy prices have something to do with it. You got crude oil over $90 because one, the dollar is losing its purchasing power. I know, the dollar index is up because relative to other currencies, the dollar is strengthening. But the dollar itself, I mean, the absolute purchasing power of it, just go to the store and tell me, how's that stronger dollar index helping you with your grocery bill? It's not. So we've got a lot of problems right now in the economy. You got rates rising. If you look at the chart of the 10-year yield, that is spiking up at an incredibly fast rate. It's putting a huge amount of pressure on the banking sector. I think we might see a banking crisis here in October, folks. I mean, I don't have a crystal ball. I'm not even a financial analyst or a financial advisor. I'm just some guy on YouTube. But when you see the banks in the US who began to fail in March, we've already had more deposits. The banks that have failed so far this year, their deposits exceed the deposits of the banks that failed in 2008. So we've got a major banking crisis already this year, and it's just kind of been papered over. But rates continue to rise. So these banks, they're sitting on all of this U.S. Treasuries, all of this devaluing bond portfolios, and every time that 10-year yield moves up, the banks on paper, they have unrealized losses. So, as you see that 10-year yield surging up at a record pace, we're now, by the way, at the highest level on the 10-year yield since 2007. I think since October of 2007, right before the Great Recession kicked in. So, leverage in the economy in 2007 was much lower than it is today. You look at the national debt, it was under $10 trillion back then. I don't know what consumer debt was, but it wasn't nearly $1 trillion. It was a fraction of what it is today. So, the banks are headed toward disaster. There's no way the Fed can begin cutting rates because inflation will run out of control. So, I mean, they're trying to talk a good game, trying to manage expectations, but things are not looking good here. And that is why, I view these pullbacks in the price of gold basically as a buying opportunity. Again, not financial advice, just a guy on YouTube, but that is what I'm looking to do. I picked up these half dollars from SD Bullion recently. Now, had I waited, they would be lower, right? I think I paid about 20 times face for these. Right now, SD Bullion has junk silver on sale again. You can now pick up half dollars for, I think, what do we got? 18 times face, 18 and a half times face. So you can get a roll of half dollars for $186. I paid about 200 for those rolls. So, could I have gotten them for a few dollars cheaper if I had waited? Yes. But when I look at what's going on here, I just think that it appears we're getting close to some kind of a terminal event here. And I think that it is just important to be early rather than late. I'd rather be a couple months or even a couple years early to the hard asset party than a minute late, because if you're a minute late, you're not going to take part. And, the price of the metals could be falling further. This is the long-term chart of silver. I've kind of zoomed in to recent price action, but you can see it's trading within this kind of downward channel. And I think there's a very strong possibility that if we see a pan sell-off event, if we see a liquidity crisis, if we see a debt crisis, if all the BRICS nations decide to dump their U.S. treasuries and we see spiking yields, if another one of these banks goes under or needs a bailout, it's very possible that we could see this fall, maybe to the downward portion of this trend, which would put you at about $16 or $15. But listen, I mean, you don't want to wait necessarily until that happens to come in and buy. I know it is tempting. I mean, I do think it's a good idea to keep some dry powder because there probably will be some things on sale if we get a pan sell-off, but I don't necessarily think that physical gold and silver are going to be the assets on sale. Because if you recall what happened in March, people have short memories. It's funny. If you recall what happened in March when the banks started to fail, you saw premiums on gold and silver absolutely exploding. I just showed you that sale at SD Bullion where you can get the half dollars right now for $18 basically per $1 face. And that's it's a premium, I think, of about $3.29 over spot. Pierre in the chat there, you're not super late, buddy. You're just in time. Thanks for joining. And thank you to everybody, by the way, who's joining us for this live stream. Please do give it a big thumbs up. That really does help get this information out of the algorithm. I know it can be annoying to even find if you're on a mobile device or whatever, but please take a moment just to give us a like. We're at 33 likes now. Let's see if we can get that up to 100 before the end of the video. I've got 167 of you watching. I would love it if we could get 100 thumbs up. That would really mean a lot to me. So please, if you don't mind, just take a moment and click that thumbs up if you find this information helpful. Okay, so right now the premium on junk silver about $3.29 over spot. We got spot price about 22 bucks. Now in March, this stuff, the premium on this went up to over I think 60% at one point, because this stuff dries up whenever there's a crisis. If we see a liquidity crisis, if we see a pan sell-off and we see the price of gold and silver declining, I really don't think it's going to be because a bunch of people are rushing out to their local coin shop and saying, oh, please get me out of this physical metal. No, it's going to be quite the opposite. You're going to see a lot of people going to the coin shop, going to SD Bullion, and trying to get into the safety of hard assets. Because this time around, in the past, in 2008, the metal sold off, even physical, although premiums did go up at that time. But that was a real estate crisis, this time it's going to be a currency crisis, a sovereign debt crisis. It's going to be a different animal. And the amount of printing that's going to need to take place to rescue this system is going to be absolutely enormous. And I think that there's going to be a lot of pain before then, because the Fed is going to be waiting until people are just begging for intervention. I do appreciate everybody who hit the like. Thank you so much. I saw that we're at 62 likes, 63. Thank you all so much. I really appreciate it. Yeah, I don't think that when we see the spot price drop, it's going to be because people are selling their physical bullion. It's going to be because they're liquidating their, ETFs, their futures contracts, their paper, gold, and silver, because they're going to be selling everything because they need to raise liquidity. There's still a lot of very levered up actors in this economy. And if you start seeing paper assets declining, they're going to have to cover some of those short positions. You could see a big short squeeze in various sectors of the market. In a liquidity crisis, people sell everything because they need cash. But I don't think they're going to be selling gold and silver. Again, remember in March, premiums exploded. Premiums on junk silver went up to like 60%. What did a US Silver Eagle go to? It was like 100% premium. Now, that also had to do with the fact that the mint wasn't making enough of them. But hey, guess what? These, half dollars, these haven't been minted since 1964. So the supply is fixed and diminishing in these. Every time we get a spike up in the price of silver, these things get melted down. So who knows how many are left out there in the wild, but I don't think too many people in a crisis are going to be looking to sell those. They're going to be looking to get into those. Paper, gold, and silver, yeah, sure, they'll be, crushed. But that doesn't necessarily mean that physical metal will. So, if you want to buy physical gold and silver, I think now is probably a good time. It's, again, not advice, but that is probably what I'll be looking to do, to capitalize on these pullbacks. I did just pick up that silver, so we'll see. But if we see much of a pullback more, I'll probably pick some more up. Yeah, Silver Stormy Normie in the chat there says silver is so manipulated. Yeah, well, it is. It's true. Paper, gold, and silver, this stuff is not manipulated. It's the paper, gold, and silver that are used to manipulate the price of the underlying asset. It's very weird. I mean, you have a derivative, the spot price, which is a futures contract price, being used to determine the price of this stuff. But look, when crises happen, that price disconnects. That's why premiums explode. If you had junk silver back in March, you could sell it for way over spot. You could sell, I don't know if you could sell it for 50 or 60% over spot. There's always a spread, but the premiums were high, even for the seller. Even SD Bullion was paying, several dollars over spot for junk silver, and they're an online dealer. So, they're a market maker. There has to be some spread there, but they were selling it for like 50 to 60%, and you couldn't get it, even if you were willing to pay it. It was completely out of stock everywhere. So anyway, I even talked with the guys at SD Bullion, I remember back in March, and to give you an idea of what that situation was like, it wasn't that there were all these little orders coming in, people dollar cost averaging into the gold and silver that dried up the stock of things like American Silver Eagles and junk silver. It was the fact that they were getting hit with huge orders, like $1 million orders, $500,000 orders, because there were people, serious investors, coming to them and saying, like, look, I need to get into physical. The banks are potentially on the verge of collapse. And I really think that the crisis in March is going to pale in comparison to what is right around the corner. Things have deteriorated a lot since then. China has been dumping treasuries. The Fed has been dumping treasuries. Rates are a lot higher now than they were in March. So those losses on those bond portfolios are significant. And consumers, if they get pressured more, that makes up a huge percentage of GDP as consumption. We know the consumers tapped out, record low savings rate, record high credit card debt. Now, this data from the government, this official economic data, consumers are weak. That's not what they were telling us when they originally released the data, of course, because they're trying to obfuscate how weak things are here. Look, their game is perception management. The Fed and Keynesian economists, they think that consumption drives the economy. What really drives the economy is savings and investment and productive growth, but they think it's just consumers. That's why when they want to stimulate, they just send out a bunch of cash to people to drive consumption. But the problem is, when that happens, you get massive inflation, which we're reaping the benefits of now. And, no matter how high the Fed hikes rates, inflation isn't going down until the deficit spending stops. Now, I would like you to put something in the chat for me here. If you think that we will see the government impose austerity, raise taxes, and pay off the debt the responsible way, put a 1. If you think that they'd rather print the money, put a 2. Just let me know what you think. Let's get an idea of what the stackers out there are thinking. But obviously, I think this audience is pretty well versed in what is going. Yeah, I see some 2s coming into the chat now. And you're right. They're going to just pay off this debt in devalued currency. It's the only way you can pay off a debt like 33 trillion or unfunded liabilities like 194 trillion. There isn't that much money to tax. Someone asked what year this is. This is a 2023, and it's got the queen on it instead of the king. So it's one of the ones minted earlier this year. I picked that up from SD Bullion earlier this year. And again, I probably paid a little bit more for that 1 ounce gold coin that I would have to pay today. But do I, sweat that? No. Look, I'm happy when gold prices and silver prices fall in this environment because I understand that a lot of people out there, they take these government numbers at their face value. It drives investment behavior. Not to mention, all the algorithmic traders out there, they take all of these government numbers as gospel because, they're machines. I don't think they're programmed to say, well, the government's probably lying about this or that data piece. No, they just behave as if the data is accurate. And there's going to come a day when investors at large begin to realize that the Fed's inflation fight is doomed. There's no way they can fight inflation when the government continues borrowing all this money from the future and putting it out into the economy today. That's why inflation is still moving up. It's not because Saudi Arabia and Russia are not producing as much oil. That's a part of it, certainly, but that's not what's really going on here. The reason that inflation is continuing to run out of control is because the deficits and the debt continue to grow. So, when I see the price of gold fall, I think, great. I'm glad that economic actors out there think that the Fed's going to be able to bring inflation down because it means I can get a discount on gold and silver. I can lower my dollar cost average. I can get more metal for my fiat. That's really all I view these pullbacks as, is just a buying opportunity and evidence of how manipulated these markets are. But look, that's to our advantage because we're approaching a point where they can't manipulate expectations any further. It's like Ayn Rand used to say, you can ignore reality, but you can't ignore the consequences of ignoring reality. We're at 95 likes right now, by the way. I just want to say a huge thank you to all of you. Can we get five more? If we get five more, we'll be at 100. That would be awesome. I would really appreciate that. And hey, if you haven't subscribed yet, consider hitting that like button and subscribing to the channel. If you hit that bell notification icon, you'll see when I go live with these live streams, and we can interact in real time. Oh, 103. Thank you all so much. I really do appreciate that. But yeah, the numbers are cooked, folks. The government data isn't real. Surprise, surprise. I mean, I think all of you are probably already aware of this. But when cooked government numbers drive the price of gold and silver down, I just look at it as a buying opportunity, because when they have to bail out the banks, when they have to bail out Social Security, when they have to bail out Medicare, when they have to bail out $194 trillion worth of unfunded liabilities, this is what you're going to want to have. Hard assets, not paper, not promises, not anything with counterparty risk, because this is probably going to be a reset of the system. I mean, I really think that we might see that. I mean, and who knows what that's going to look like? They're cooking up all sorts of stuff for you, guaranteed. Cover stories, to tell you why things are falling apart. Please, to explain why they have to do what they're going to do. But maybe we'll get a CBDC. I talked to Lynette Zhang yesterday. If you haven't seen that interview, go check that out, because it was a good one. She says the CBDC is right around the corner. And I mean, it's very possible. They're continuing to work on it. The BIS is testing all these CBDC systems, and it's just doubling down again on failed policies. But ultimately, it's going to result in the destruction of the fiat system. And this sort of thing does happen every 80 years or so. If you read the book The Fourth Turning by Strauss and Howe, 80 years ago we had the conclusion, or 80 years ago we're right in the middle of World War II, 1943. 80 years before that, Civil War. 80 years before that, Revolutionary War. So every 80 years or so, things change in a very big way. And, another cycle to pay attention to is the the Dow to gold ratio. And if you go back and you look at the chart for that, I don't have it pulled up right now, but in 1932, we had, major deflationary event, the Great Depression. The Dow to gold ratio got close to 1. So basically, I think it was for about 2 ounces of gold, you could buy the whole Dow. In 1980, you had a similar thing. That was about 50 years ago. Now, 50 years later, so every 50 years or so, you see this Dow to gold ratio collapse, and I think we're approaching that. I think that the price of physical gold is going to do very well, and I think that all these paper assets are probably going to be collapsing. Someone in the chat just said, Scottsdale Mint, seriously? Heck yeah, I love Scottsdale Mint. I don't know about you. I think they're great. I love their Kit Kat bars, their stackers. This is a 5-ounce stacker. I love Scottsdale Mint. One of my favorite mints. Sometimes the premiums on these are a little bit high, but that's what I like to buy them, because they go on sale every now and then. I got this one from SD Bullion. It was on sale, I want to say maybe Black Friday. I don't know, almost a year ago. They had these on sale, and I picked it up. But the premiums on those are usually a little bit higher. So if you can get some real high quality bullion like that from Scottsdale Mint for a low premium, I think it's something to capitalize on, absolutely. But that's all I got for you today, folks. Thanks for tuning in. 126 likes. That is amazing. Thank you all so much. Really appreciate that. Again, check out that interview I did with Lynette Zhang. It's a good one. It's a little longer, but you can put that one in the background and listen to it while you do, your chores or you're driving to work or whatever. It is a good one, though, so I definitely check it out. And yeah, just stay safe and happy stacking, everybody. Get ready, because you might see the spot price of gold and silver further, but I think physical is going to be the thing to have. And not financial advice, but I would just take advantage of these dips. So leave me a comment down below to let me know what you think, and I will catch you next time. Smart Silver Stacker out.